Well, as always, guys, jobs seem to be the big mover this week from what I can see. So it is the 7th of February, another Friday's on us. And I'm looking at, a lot of the stuff that came out this week. And it was actually helpful for the bonds for the most part until we got to the day when we started looking to non-farm payrolls. Now, the forecast or what the consensus was showing an increase of 155,000 on the payrolls, but went up 143,000. So I would have thought, since it was lower than what was anticipated, maybe we are going to see some negative movement. But the problem is the revisions. You go backwards to the prior months. Last month was revised up. December revised up from 256,000 to 307,000. So that had an impact in itself. So that is the non-farm. You get into the private payrolls. You also saw an impact from a revision from 223 to 273. Now the consensus this month was 163, and we end up with 111,000. So it went down, but the pattern that we have here as far as the revisions and these monster revisions, that's kind of significant when you start looking at that kind of deal. So when you start seeing those type of situations, it starts to feel a little bit like, we talk about the traders and how they feel and how they may want to operate their business, where they think they're going to get their return. They're going to move where they believe that that's going to influence an increase in value, which means going into stocks potentially. I didn't look at the stock market this morning. I just always go directly into bonds and see what's happening. And we are seeing, and I will show you, those bonds take a bit of a hit. So let's go ahead and zoom in right here. So we've been seeing, as we've been showing, the bonds coming up, testing these ceilings, if you will, broke through what used to be a ceiling, is now a floor, went above, tested this ceiling, went above it, actually hit moving average, came down now today with these numbers, bam, right back into this. So we're into this channel here. These are tough levels to get through, because if you see here, traders look at that and say, okay, when was the last time somebody sold, or when was the last time somebody bought in here? And you see right here, it held a certain point and it went way down. There was a lot of influence there. These levels that they look at have influence over what decisions they make. So I watch that. Now, is that a perfect method of determining where things are going to go? No, but it's kind of getting an idea of what goes on in the head of a trader and understanding where they might go, what they might do, which we also know those traders are watching this big block up here, this line here, and especially this one here. Those represent the biggest barrier for us to get through. Is like the Great Wall of China. Getting through that's going to be real freaking tough. And people ask if rates are going to go back down. I don't think so. But it's crazy when you hear all these podcasts and all these gurus and all these people with all this intelligence about buying real estate and investing in real estate, talking about how the rates are so high. It's so difficult for people to afford a home. It's not that the rates are high, guys. It's that the rates were so damn low that it pushed the prices so high that it's impossible to find that same type of level of affordability that we used to have back when the rates were normal, which is what we have right now, because the prices were normal. That's what we're dealing with. We're not dealing with extremely high rates. We're dealing with rates that are very, very, very normal, especially for given the market that we've got. But we're dealing with price of housing that's never really reconciled. So that being the situation, the rates being normal, prices of housing being extremely high compared to what they used to be, and the dollar not stretching the way that it used to, things are very, very expensive. And that's just the way it's going to be. If you're sitting here waiting for the rates to go down to invest in real estate, you're going to get hurt. Call me. Let's talk about it. Let's figure out how we can help you be a little bit more successful and think a little bit more ahead of the next guy so you can be successful in buying the investment real estate before they do. Because if the rates do go down, if I'm wrong, prices will go way up. You're going to pay for it anyway. Might as well get in now and get the value of your asset up. So appreciate you guys. If you have more that we need to talk about, text me 602-291-3357.